You saw the green candle, you ignored the rules, and you bought it at the peak right before the dump. Setting rules will always save you. They filter out false signals. They turn I hope into I know. Next time the market tempts you to open a trade, ask yourself, am I following the rules? And that should save you from opening at least half of the false or fake signals. Now, when you're in a trade, you think, should I close it? What if it reverses? Pros don't think that way. You know what they do? They set a stop loss, they set a take profit, and then they walk away. Why? Because they trust their strategy and not their moves. Think of this. You're a pilot. Once a plane is on autopilot, you don't take control every single time there's a little bit of turbulence. You let the system do its job. However, I have to admit, even I've been through this. If the price move is against my position, I could exit my trade too early. And in some cases, even if my trade is in profit, the greed could set in, making me hold on to that trade for too long. Everyone's guilty of it. That is not trusting your strategy, but rather your gut. The easiest fix for this is to set your stop loss and your take profit before you enter the trade. And then go away. Let the market do its thing. Risk management is probably the most important thing in trading. Never exposing your entire portfolio and managing your risk is the key to winning. Professional traders don't gamble, they protect. They know that no matter how good the setup looks, the markets can turn against them in a second. That's why they always have a safety net. And here's how it works. Before they even think about entering a trade, they decide how much they're willing to lose. Not just some random number, but a calculated percentage of their trading account. For most professionals, it's 1 to 2% per trade. Also, if they're putting $100 into risk, most traders look to reward at least $200. So even if they lose 2 trades after this, they'll still just be at break even. I want you to let me know if this has ever happened to you. You're sitting there watching the charts, and then suddenly everything looks like a setup. You've got crypto pumping, forex pairs are moving, indices are breaking out, and you think, I don't know what to take, so why not take them all? So you open one trade, then another, and ultimately you find yourself managing 10 positions at once. Overtrading is one of the biggest mistakes that new traders make. Professional traders, they don't chase every move. They focus, they pick 1 or 2 setups, execute them flawlessly, and walk away. Why? Because the more trades you take, the more mistakes you make. Chasing every opportunity that professional traders see actually backfires. When you have too many trades open at once, you spread your focus thin. I mean, imagine trying to track 5 different currency pairs or 5 different instruments, trying to manage all of their risks and their outcomes. The more you take on, the higher your chances of making mistakes. Instead, stick to a plan. Limit yourself to a fixed number of trades per day. I know I have that rule. Focus on only 2 or 3 markets. I only trade Forex. Focus on markets you're familiar with the most. This reduces the pressure and helps you make more calculated decisions. Also, simplify your charts. I'm a huge proponent of this. Too many indicators or lines can clutter your analysis and lead to confusion. Keep it simple. When you keep your approach clean and disciplined, you'll notice that your trades become more precise and your stress levels drop. We all know the feeling. You just lost a trade. Maybe it was a bad setup. Maybe you ignored your rules, or maybe the market just didn't care about your trading plan. Whatever the reason, we all know the feeling. You're angry. You're furious. And now you're staring at the charts, hunting for the next trade like it's life or death mission. Here's the brutal truth. Revenge trading is a dangerous trap. The market doesn't care about your emotions. It doesn't owe you anything. And when you trade out of anger, you're not trading, you're basically gambling. So to avenge the market, you start convincing yourself, just 1 more trade, and I'll make it back. So you rush in, placing another order without proper analysis. Maybe you even increase your lot size, thinking a bigger win will erase the pain of your loss. but deep down, you know what will happen next. The market moves against you again. Now the loss is even bigger, and panic sets in. So you chase with another trade, desperate to recover. And just like that, you're trapped in a cycle, digging a deeper hole with every impulse decision. Pro traders, they take the loss, they accept it, and they move on. Now, the problem is, how do you overcome trading out of frustration? The solution is to create a rule for yourself. After a losing trade, take a break. Whether it's 10 minutes, an hour, or even a full day. Pro traders oftentimes have the 3 strikes and they're out rule. They stop trading after 3 losing trades. Review what went wrong. Don't rush to fix it with another trade. The market will always be there. Your capital, though, not if you're chasing those losses. Trading psychology is as important as the analysis itself. Trading isn't about winning every trade, it's about winning the war. If you follow these 5 rules, you'll not only avoid the chaos, but also build a mindset that is more valuable than any short term gains. Remember, rules beat emotions. Discipline